People are going crazy for luxury watches, but at the same time, we're going through a huge cost of living crisis and a recession. How are you expecting demand, but also supply, to hold up in 2023?
You know, it's a supply. Obviously, we get indications and commitments, in fact, on supply from our major watch brands. We are pretty confident and I've never been let down on supply at all once the indications are given. So we feel okay on the supply side. In terms of demand, you've been a great deal of what we sell. A majority of what we sell is to pretty extensive waiting list clients. So you're really looking at years worth of waiting lists. So we don't see that being affected at all. And the balance of the business, we're doing very well. We're going to continue with our investment, our great client service. We're getting market share. So we are. All that we've dealt into a statement that we're maintaining our guidance for the year, and feel pretty positive about the future.
Yeah, Brian, I mean, it's interesting, isn't it? The stimulus checks, they came through. That was a fuel, of course, low interest rates. We're in a different environment now. Recession fears. We were speaking to BlackRock just 15, 20 minutes ago or so. They say a recession is baked in now for the US next year. Can you really maintain your guidance within that environment? There's going to be a squeeze even at the top end, isn't there?
Yeah, I mean, there's no question that the economic scenario is pretty negative. I think in the UK, everywhere you turn, there's a real indulgence in negativity, I think. Our consumer is less affected, but I think most importantly, our category is less affected. We really believe, and I think we've proven that the watch category is underdeveloped here in the UK, especially in Europe, in the US. Also in Europe, where we've just launched. And we have a leading position. Our model in that category is working very well. I think we're very fortunate that what we sell predominantly is Swiss watches. So it's a conservative industry. They've never chased opportunity. The focus is on quality of product and innovation. And we have the greatest partners of Swiss brands that you could imagine. So we're in a fortunate situation. We're not being complacent. We did say that we expected the second half to be tougher, and that has been included in our guidance for the year that we're holding.
When you look at, I don't know how much you've been able to increase your prices, but what's your price perspective for 2023? I mean, if you increase prices by 20%, would that make a difference to demand?
I think, again, with the brands that are under huge demand, the secondary market prices are way more than 20% above retail. We effectively don't set our prices. We follow the recommended retails that come from the brands. Prices have gone up this year, on average, somewhere around 7% or so. We anticipate there's potential for price increases again next year. We haven't included that in our numbers, but we think potentially it could happen. But we experience no real elasticity. The demand continues to exceed supply, and honestly, pricing has a very little perceptible impact.
Brian, before we let you go, and as I wait for my Daytona on the waiting list, I wish, give us your top 3 under $10,000 watches that we can be looking at as we head into the holiday season.
The most popular watches are diving watches. The Submariner is under 10,000 and hugely popular from Rolex. There's other great, the Santos from Cartier is a great range. The Seamasters from Omega. There's a wonderful choice, and we have them all in the Watches of Switzerland.